Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, August the 10th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore, what I'm doing could be counterintuitive to what you are already doing. And please remember the past performance of any trading system or methodology is not necessarily indicative of future results. Having that out of the way, let's get it on. A little economic data. One thing about economic data across the pond, let's look across the Pacific first. Yesterday, late in the afternoon, we got a Japanese number that I think is pretty important. It was actually late afternoon. I don't usually talk about the Japanese numbers, but this one seemed to be pretty significant ahead of their bank holiday today. But they had core machinery orders come in at negative 1.9%, was expected to be an increase of 3.6%. So that's a pretty big drawback for machinery orders. I just thought it was pretty significant to note. It isn't a widely looked at number, but it just kind of stuck out to me. That was a big miss. Then we have across the other pond, across the Atlantic, we're going over to Europe today. We got French industrial production came in at negative 1.1%. So the French isn't really known for industrial production, but needless to say, that is a bit of a drawback. Great Britain manufacturing production came in unchanged, in line with expectations, and they it was even basically. And last month's number got revised up slightly from negative 0.2% to negative 0.1%. And then we also got Great Britain's construction output month over month came in at negative 0.1%, was expected to be a positive 1.4%. The other thing is they did revise last month's number up from negative 1.2% to 0.4%. So a nice revision there. It doesn't really kind of wash the number that we got this month, but at the end of the day, it makes it pretty close, and some people will kind of hang their hat on that. Then we also got Great Britain industrial production came in at 0.5%, higher than the expected 0.1%, and they revised last month's number up as well from negative 0.1% to even. Then here in the United States, we got PPI, Producer Price Index, month over month, and it's basically the cost that the producers see on the goods and services that they're putting into those production. Actually came down slightly to negative 0.1%, expected to be a positive 0.1%. Now, that number being lower, it's a little counterintuitive in the sense that you would think that money that they have to pay for those prices for the inputs is lower. That may make it seem like, well, then they're doing better in a sense on the bottom line, but at the end of the day, it's kind of deflationary, which isn't necessarily a good thing. And then we got unemployment claims coming in, weekly unemployment claims coming in line with expectations at 244,000. We had core PPI, which is the core producer price index, came in at negative 0.1%, expected to be a positive 0.2%. And then we also have Fed Governor Dudley speaking right about now. He's probably in the middle of his talk. And then natural gas storages came in at a 28 billion cubic feet, was expected to be 38 billion cubic feet. And later on this afternoon, we have the bond auctions, which used to be a big deal when I was in Fed funds, not so much now that we're trading equity options for the most part. Anyway, on to the overall markets. We got crude oil down slightly right now, 36 cents or so. Nothing to see here, just an up day, down day, and crude oil, and stuck right there at the point of control. So that magnet holding pretty strong right now, but staying above that $49 a barrel area. Gold futures up quite nicely today, and yesterday was a big move higher, up almost $12.50 right now, approaching the value area high. And remember, we talked about this a while ago, these tweezer tops, that is going to be a pretty strong line to get through. That's going to act as a major resistance there, as it did the last 2 times. So keep that in mind, and it pretty closely lining up with this value area high. You can see the market's going to need to get through this little trough in the market profile right here. That's basically where that's kind of lining up. This is because we have equities down, and it's a flight to safety. So economic data points coming out aren't the best right now. So people are finding a safe haven in gold, if you will. Bonds up slightly today. Yesterday they were up. Huge late day rally in the equities caused those bonds to come off. They never really recovered, even though the equities continued to kind of slide again. But bonds up a little bit. I think that's probably proper. Don't see a lot of change in the FOMC members' rhetoric coming out of there. It seems like they are pretty comfortable with where the interest rates are. So I don't really see bonds having much room to move to the upside unless we get a really big correction in equities. On to the Dow Jones Industrial Average, down over 100 points today. This market right here is recovering a little bit. It was down quite a bit more earlier today. Down about another, what was it? Another, let's call it 30 points or so. 30 points, it seemed like. So it's gotten a little bit of a bounce. We'll see that more when we pull up the E-mini S&Ps, where that bounce is. The Dow Jones, again, as tech sector really suffers, there's still going to be a little flight to safety in a sense, where the Dow Jones has a tendency to hold up a little bit with those blue chip stocks, and the first money to get pulled out of is usually the tech sector, which is definitely a more volatile space. But as you can see here with the NASDAQ, it's down over 76 points right now. This has really approached this 50-day moving average, really started slowing down on that downward momentum, and it will act as support as well. So NASDAQ down quite a bit today. And I'll talk about one stock that I'm about ready to pull the ripcord on that's in the NASDAQ. Looks like the E-mini S&Ps have accelerated to the downside. Before I started this, when I was looking to get set up for this, it was getting a bit more of a bounce, but E-mini S&Ps are down about 20 plus points is what I'm talking about. There was a bit of a bounce going on in here. If you look at this doji right here on the 30-minute chart of the E-mini S&Ps, got a bit of a bounce, and we were getting a green candle, but now it's starting to accelerate to the downside as well. Just a pretty bearish tone in the overall market. We got the only earnings that we really have coming out today is Macy's. I'm not going to trade it. I would trade it to the downside, but Macy's has been beaten up so much that basically there's no option value in and around that. So with that being said, the overall equity picture not looking so great. It looks like a lot of these markets are kind of breaking down below some support levels. We're going to have to see how it works with the 50-day moving average here, but I decided to add some short deltas. I've been talking about this in the daily market commentaries. I just wanted to add more short deltas to my portfolio. Just seemed like, when you start fanning out like this, it was ready to start rolling over. So today I added a couple of QQQ, which is the ETF for the NASDAQ. In my IRA, I went in and did the September and sold the 148 calls, and then, sold the 147 calls, and then So I sold the 146 calls in the September, and then bought the 147 calls and did that for 32 cents. Collection fits right in line with my rules for that. I actually started out trying to sell those 147 calls and buying the 148 calls, but as the market started accelerating down, I needed to move my strikes down. Those 146, that's above the all-time high, so that was going to be the last. I moved that spread down, so luckily I got that, and it fit right in line with my rules for a short call spread. IRA appropriate, so that's why I put that in there. On the margin side of my trading account, I went into September and sold the 147 calls and collected 66 cents for that. Again, I was trying to do the 148s. The market started sliding, wasn't able to do that, had to move my strikes down. So sorry for that bit of confusion there. But that is what I've added for short deltas in both of my portfolios. I haven't taken anything off, but I am ready to pull the ripcord on EA Sports. And if you remember, in EA Sports, I went in there and I have on the September 110 puts that I collected a credit for, and that's not looking too good right now. So we get much more of a sell-off. EA Sports being part of that tech sector, I'm going to be keeping a real close eye on that. If it gets much lower and the market starts really accelerating downside, I'm just going to rip out of that one, because as you can see, my 110 puts are a bit of a ways away, but $5 in a day or two could easily happen, and I don't really want to see that. So hopefully we can get a little bit of support here on EA Sports. All right, that's all I got for you guys. Tomorrow webinar we're going to be doing on the short put butterfly, long put butterfly, and that's going to be a little bit better setup than we were able to do with the call side, and the long call butterfly. I'll go into all the rules why that, or reasons why that's a little bit better strategy. They're going to act the same because we're looking for a market neutral type of situation. The put side will be a little bit better setup for most of you, and it is IRA appropriate. And we'll talk about that all tomorrow in the webinar. So go to ProTraderStrategies.com, get in there. We've been filling up those rooms, so make sure that you're in early for that as well. All right, so if you can't take that, take it easy.